I'm Catherine Ross, and I'm here live on the floor of the NYSE. Jim Cramer is off at the JP Morgan Healthcare Conference this week, so joining me is Jeff Marks, Senior Portfolio Analyst with Action Alerts Plus. Jeff, it's officially earnings season, so let's start with the lightning round of the bank earnings that we got this morning. Let's start with JP Morgan. What's your biggest takeaway?
All right, so first I want to say with the banks, what we're seeing right now is strong fees offset weaker net interest income, which is one of the measures I told you to look out for yesterday. So I think that plays well for some of the bigger banks versus the small banks. And also credit remains strong. So I think that's a really good read for the economy. But so JP Morgan, I mean, best in show. They beat on, I think they were in line to beat on nearly every single line. So really the only question here is valuation. But I think with credit strong and the economy going strong, that's why that's up today.
What about Citigroup?
Citigroup, yeah, solid numbers here. I think the stock is still pretty inexpensive relative to all of its peers, so that might give it some more cushion to run, and I think that's why you're seeing some buying today as well.
And Wells Fargo?
Wells Fargo is a tough one. I think you have to give the new CEO, Charlie Scharf, more time. Everyone knows he's going to invest heavily in technology. That's really how they have to kind of kickstart their growth again, so you just have to give that one more time.
This morning we got a letter from Larry Fink and BlackRock about their new initiative, which is climate change. And I have to ask, they said that they're going to try to move away from oil. So is moving away from oil more than just a millennial move now?
It's a good question. I think first off, that was such a great letter. Very compelling. I highly suggest everyone read it. Whether you invest or in anything, because I think there was just so many good points that were raised in that I personally have never thought of, like whether it be how climate change can affect inflation, interest rates, the 30-year mortgage, just the way climate change can impact modern finance. I thought it was such a good argument. It was such a good reason. And I think what's important too is holding CEOs and executives. A lot of companies like to give scorecards to their CEOs, and that's how you hold them accountable. But adding a sustainability measure into that equation, I think is game changing. So I thought it was great. I thought it was a very strong letter. Great arguments.
And it really goes along with what Jim Cramer has been saying since this summer about, sustainability and the need to focus more on being sustainable.
Yeah, exactly. And, we are seeing, first of all, there's a lot of companies today that are taking a lot of measures to be carbon neutral, and get sustainable, over the next couple years. I know Salesforce, just off the top of my head, Salesforce does that, is very big on that. And I was reading the conference call yesterday at Novartis at the JP Morgan Healthcare Conference, and they brought up sustainability too. So just two examples there, but there's a lot of companies who are doing, who already stress this highly.
So it sounds like what you're saying in general with sustainability and putting it closer to oil, that it is time to start moving away from that, correct? It's not just some millennials ignoring it anymore.
No, I don't think it's just a millennial movement. I mean, that's also considered that a lot of these big oil companies, they're also spending a lot of money, investing a lot of money in some new renewable energies as well. It's just not. It's probably just not cost effective yet, which is why you're not seeing a bigger push. But I'm sure with the advancements in technology, we'll get there one day. I hope so.
This morning we got a Bloomberg article that stated that the memos that we got last week from Boeing employees were also mocking Lion Air for suggesting that their pilots get more training on the 737 MAX. And that shows to me, should airlines be worried about this? I mean, they're giving their money to Boeing. Do they just have to kind of suck it up because Boeing's one of the top dogs in the space?
Yeah, so this is interesting. So I think it's really more about kind of the culture issues going on at Boeing right now. I mean, they are still they're universally known as a great manufacturer, a great American company. It just sounds like there's a lot of culture issues right now, and maybe they need a little bit more humility, just kind of with what's going on there. But that's up to the new CEO to figure out, and he's got to clean that up quickly.
And the Delta CEO has already endorsed him, it seems. So
that's good. Yeah, I mean, that's a good sign to kind of get everyone back into supporting Boeing, because it is going to take time.
Let's wrap with Tesla, because Tesla's currently trading around $530, and we've gotten a bunch of analysts upgrading the stock's price target to about $600. But is that too late? Like, should we get price targets that are looking at $700, $800?
All right, so I'm a huge fan of the car. The stock, I don't know if I'm the right person to go to because you've asked me about Tesla multiple times here, and I've just said I've missed the move, so it's just too hard to buy for me. Maybe this move has a lot to do with short covering too, and when you see that, it does make a stock susceptible to some type of pullback. Because at the same time, we've seen a parabolic move in Tesla over the last couple weeks, over the last couple months. Really, the run is extraordinary. So what I would say then is I just don't like parabolic moves, and I'll give you an example. So we used to own Shopify over at Action Alerts Plus. We got in somewhere in the 200s, went on a parabolic move, closed it around 380. I mean, it had nothing to do with our views of the company. It's a terrific company, and what they're doing to really change the game in e-commerce is quite a compelling long-term investment opportunity. It just ran way too much for us, so what do? We sold it. What happened shortly after? Well, there was a move against growth companies, and all of a sudden the stock fell from as high as we sold 380, went even higher, 400, and then fell all the way back to 300. We felt like geniuses. Where's the stock today? Well over 400. So I think it's just an example of how some of these high growth stocks are susceptible to big drawdowns. But I mean, hey, longer term, maybe it'll still work.
Jeff, thanks so much for joining us today.
Thank you.
Guys, thanks for tuning in. We are now heading over to our Action Alerts Plus Daily Rundown Show over on actionalertsplus.com. Catch us there. I'm Catherine Ross, and we'll see you tomorrow.